Firstly, thank you to Latia and Arabella for organising this very important event. And welcome to this session in which our four panelists share their experiences of doing business in Latin America. Aprovecho este momento también para dar una calurosa bienvenida a todos los visitantes de América Latina aquí presentes. And before I introduce our panelists, some brief comments on the legal, regulatory and practical framework in which business is done in Latin America. To the legal framework. Most Latin American jurisdictions have a legal system based in civil law. With that, each country in the region has a wholly unique legal system. Whilst these systems have commonalities, they nonetheless interrelate with each other in a complex manner. To the regulatory framework, whilst regulation in Latin America represents a significant challenge for the private sector, average levels of transparency have risen in comparison to most other emerging markets, a factor borne out by Latin America's ranking in Transparency International's 2017 index. And to the practical framework, a timely juncture at which to introduce our speakers, Leonel, Ramin, Gershon, and Ramin. Leonel, if I could start with you.
Good morning, everybody. Good morning, everybody. I'd like to introduce three ideas about the Dominican economy and the prospects for investments in the DR and opportunities. Of course, I'm going to concentrate on the good things. For any issues or concerns, I'm going to wait for your questions. Okay. The first thing I'd like to emphasize about the DR economy is diversification. You know, the economy, as Fiona was showing, has been growing and has been growing for the last decades. Something that sometimes is not necessarily emphasized is how diversified the economy is. Of course, is the strength of tourism, the strength of some exports like cacao, rum, and banana are usually well publicized. The fact that the economy is really diversified and no particular sector is actually representing more than 10% of total GDP, that's sometimes perhaps underestimated, and that's a very important factor, and I think to consider when you look at the DR in search for opportunities. Tourism, for instance, represents only 6% of GDP, and when you add the impact of construction on real estate tourism, then it may get to 10%, but never over 10%. The second idea I'd like to put some emphasis on is the strength of public sector and private sector cooperation in the Dominican Republic. And there are two ideas on that front. The first is our successful experience with PPPs, with private-public partnerships. Even though we do not have a particular law on PPPs, in fact, one is being debated in Congress right now, so we might have one at the beginning of next year. Based on a law that was passed in the 90s, PPP experience has been very solid in the DR. When we went through our capitalization model, which is our own version of privatization, many important industries like generation, distribution, and even some in the retail business that used to be state-owned have been operating on a 50-50 partnership between the private sector and the public sector, operated by private sector, and that includes foreign investment, mostly foreign investment. And that has been a very successful case of PPP that, again, I think it should be looked at when you look at opportunities in the DR. The third idea I'd like to leave you on with is resilience. Of course, Fiona already mentioned the fact that all economies in LATAM seem to be very resilient. The resilience of the DR economy is one that, in particular, should be considered and discussed. And the fact that the economy has been growing even through global economic crisis us being a very open economy, so you would expect for a greater impact of global economic crisis to be in the DR is really surprising. For instance, even though tourism fell a lot in 2008, 2012, because of the global economic crisis, the economy kept growing. On the one hand, there is an illustration of how diversified the economy is. So it goes back to my first point, because the economy is so diversified, much more than what people would expect, then it has proven to be very resilient in terms of crisis. But the second reason for that, and that's the last idea I'd like to share with you, is the fact that the economy has proven able to reinvent itself and transform itself over time. If you look at the DR economy in the 90s, where it was mostly based on a free zone model, which is long gone, it doesn't represent anything in the DR economy nowadays, and you look at what it is today, you have seen a pattern of transformation, reinvention of the economy, where new industries would come in, cinema, for instance, logistics, fintech, all of them representing a greater portion of the DR, so that economy, so that you have just one piece of information to take with you. Last week, it was reported that the creative industries now represent in the DR 4% of GDP. That's most of what tourism represented 10 years ago. So these three ideas, diversification, the strength and success of public-private cooperation, and resilience, those are the three ideas I wanted to share with you.
Thank you, Robin.
Good morning, everybody. I'm Robin MacKenzie. I'm the marketing director from De La Rue. De La Rue operates in about 140 markets globally, and we have a very long and very proud history of working in this region. From managing manufacturing facilities in countries like Brazil and Mexico, to operating build, operate, transfer schemes in Colombia. And over our history, we've supported every single country in the region with either their currency or their identity or their authentication. And we're delighted to be sponsoring today. We also have worked globally, not just in this region, but globally, on building long-term partnerships with government. So in Malta, we've been present for over 40 years. In Sri Lanka, we have a joint venture with the government, which is over 30 years, and in Kenya, over 25 years. So what I wanted to share with you today is just 5 of the principles that we've taken from that in terms of how we approach partnership and investment into individual markets and individual countries. And we're always open to those investment opportunities. The first principle sounds very obvious, but start with a shared vision and shared goal. Often the views of the private sector and government might be different about what actually is achievable. Really important for us is that we start with a view of what the country is trying to achieve and how we can support it. And equally, what we're trying to achieve and how the country can support us, whether it's around indigenizing production, whether it's around building local skills and capabilities, whether it's about the ability to support the region from an individual country. So, start with a clear vision. Second, we've heard a lot today about the amount of elections that are taking place over the region currently and over the last year and over the next year. Our stance is we are deliberately apolitical because we take a long-term view. So we need to make sure that we are investing in a country and we are supporting that country in its overall goals and ambitions. When we've been as long present as we have, many parties have changed, have come into power, come out of power. We have to take an apolitical view. Third is in these times of fascinating international trade discussions, we always look for an investment in countries that have both a global and an open outlook. And what that means to us is that ease of doing business is, of course, important to us, as is a free and open trading outlook. And in particular, where we are importing and exporting as frictionless a trade environment as possible. Fourth is work with people with common values. Now, as a PLC, it's really important to us that we do business both ethically and transparently, and we are able to report on that. But also we choose, as signatories to the UN Global Compact, to be doing business both sustainably and in an environmentally responsible way. And we seek partners that share those values so that we can build real momentum together. And finally, for a company, it's really important for us that we operate both globally and locally, and that we represent ourselves as both a global and a local entity. One of the most frustrating things for me to see is a report in a local paper where we're investing that says we are a British company, because I regard us as being in Kenya a Kenyan company. We support the local economy, we employ only Kenyans, and that's our approach. And that is the approach that we should take, is that whilst we are an international organisation, the investment choices and the partnerships we make are into the local economy to support that local economy and grow the local business. So those are my 5 key principles.
Thank you, Robin. Gershon.
Good morning, everybody. Good morning, Your Excellencies. To give you my perspective, I need to start by just mentioning a couple of things. First of all, I do business, like my colleagues, in South America and Latin America. In fact, I do business globally, so it's quite interesting to give a more general perspective and then try and make it more granular as it applies to your countries. But the reason, I think, why I've been asked to come here today is because of that active activity that we have in your countries, and some of your countries, and why we invest in some countries and not others, but also the global view as well. I work for a company called Standard LAIF Aberdeen. My division is called Aberdeen Standard, and we're a global investment company. We manage on behalf of institutions something like $750 billion, which we use, I hope wisely, to invest around the world, and we're probably one of the largest investment houses globally. We have a comprehensive range of things that we offer our clients. What's relevant in the context of what I do is the private market space, in which we find that wonderful word that's often used, infrastructure. And I manage a platform of money to invest in infrastructure, many billions around the world. I more recently have opened an office in Colombia. I'm looking to open an office soon in Peru and Uruguay. And we've started to build a platform very specifically to respond to the needs of infrastructure in Latin America. But what are the key things that I focus on? And it's very important when I say these things to think about these things in a relative context. Investment moves around the world where it is easiest to deploy and for the best return. So it's easily removed and redeployed. It's actually very liquid in a lot of markets. And so governments have got to be very aware of that, but governments can't always control everything. What governments can do is facilitate. And that's why I best look to governments and talk to governments about what can they do to help us to facilitate. And the areas that I concentrate on, as much as possible, in what I do in order to get confidence, which is the big word investors like, about a particular region or particular country, is the political environment in which we face. And often, in parts of Latin America, there's a deep intake of breath, because there's a realization that there are domestic problems in the political stability of the region. But you have to remember there are political issues everywhere. We're sitting today in the city of London that is partially paralyzed and frightened about the political stability of the United Kingdom. It's very sobering. It's very easy, perhaps we go back to a Victorian view about the British Empire and how wonderful everything is at home, and we'll put everything right globally. It's not the case. The world is a complicated environment, and what's important is sort of relative stability. And within Latin America, we have that as well. We have relative stability. We have countries that I'm very keen right now to invest in, and countries that I think will become countries to invest in as that political stability emerges. In infrastructure, it is one of the most complex relationships between long-term investment in infrastructure and a democratic short-term investment, the political horizon. We all crave for democracy and freedom, but it's not the most ideal political environment for long-term infrastructure planning and investment in infrastructure. Another sobering thought, one might think I should spend my time talking to autocratic regimes where the heads of those governments are in power for 30, 40 years, because that matches the life of my infrastructure investments. But actually, that isn't really the case. I would much rather be dealing with countries like you, and the next reason becomes paramount, because I need to be confident there is a robust legal framework. Now, legal frameworks are different around the world. But what does robust mean? So I'll just make one comment on that, because it's a week's conversation, and I don't have that length of time. There have been, and no one's really mentioned it, they call it sort of political instability, the word corruption. Okay? I speak at the G8, the G20, and it's a word people don't like to use. So I'll give you my take on it. Every country in the world has corruption. There was, the place where I buy my coffee in London, the finance director has just been arrested. And we expect that will become a fraud and a corrupt situation. So just making the point, let's not have a deep take a breath. What do I therefore want to see? I want to see what I saw in Brazil with Odebrecht. Quick action, quite heavy fines, and penalties being put into place by the courts for those that have committed crimes. That, in the first instance, is a very confident thing to see. And I think the response to some of those big corruption scandals has been very, very impressive. Yes, you have corruption, but many of the countries in Latin America are dealing with that corruption, and that is something I take a lot of comfort from. I'm not minimizing the issues, I'm just giving you a perspective. And then the last thing I just wanted to say about frameworks, very, very important. When you're dealing with issues around infrastructure investment in particular, there has to be a degree of consistency and experience and capability within governments. Now, there are a lot of clever people in governments. The problem is that the politicians move around and the civil servants move around all too fast. And keeping centres of excellence in terms of procurement, for example, are so vital. And there are some good models already emerging and have emerged over many years in Latin America. You have, just thinking off the top of my head, you've got an organisation called ANI in Colombia that is a dedicated centre of excellence within government that will survive different political changes. The head may change, but the organisation will be there, looking at how to best procure and the way in which infrastructure should be procured over the longer term. There's an organisation in Peru called Proinversión. There are organisations around Latin America. Those are very good models. So those three things to me are vitally important. Political stability, the legal enforceability, and having very solid, robust frameworks within government to look at long-term delivery.
Thank you, Gershon. Ramin?
Hi. I represent LLB Investment. We are fund managers. I manage 55 different funds, from pension fund to trade unions and a lot of family offices. And what I see since 2013-14 is the outlook of investment, that the nature of investors has changed. As before, investors would have dedicated the fund to a secondary fund or to a bank. More and more, they want to have hand-on approach. Partly because lack of finance from banks has forced, especially in London, that many family offices come together and do investment together without the usage of banks. And to do that, you have to look at areas that you are going to invest. I'm not going to repeat what my colleagues have said already, but one of the important factors is why would you invest in a country outside your homeland? I think this is part of the problem that you try to explain to various countries or organizations that they're asking for funding, that if one can invest in property in Manchester and have 9-10% return, why would you go to a country other side of the world and invest the money for an interest return less than that and a higher political risk? And the answer is, there are several answers. There are countries, I looked at on the brochure today, And I saw they are saying about the foreign direct investment. The country that attracts most foreign direct investment is US, and has a reason. The reason for that is the currency of US is the currency of trade. So you buy commodity with US dollar and you sell your goods in US dollar. So there is a level of stability. There is a political stability, I hope, which still is there, and is check and balances. If you look at on the list, then you go to China, Hong Kong and China, and why would people want to invest there? Because it's a long-term growth, is a high return, and it's a possibility of bigger export. But the interesting part, and I'm not saying it because I'm Swiss, if you look at on the list, on the 9th level is Switzerland, which has a population of only 7 million. And ironically, 1.5 million are immigrants, so it has the highest proportion of immigrants in Europe. And it has the highest level of investment. And the reason for that is the currency, because it's a strong currency and it's a stable currency. And even if your business doesn't do that well, you will do very well on the currency. And I think this is very important to look at it, saying why would people come to a particular country to make an investment? The final thing I want to say is often politicians put policies, whether it's PPPs or other policies, which is suitable very much for investment. But a policy needs to be administrated. And if the policy is not administrated, it's meaningless. I think that's probably one of the part of the problem of after referendum in UK, that the policy is coming out of European Union, but who is going exactly to administer that? And unless the civil service is being groomed to be able to administrate and is not changed very often, then it would be impossible. So I have been to countries around the world to do investment, brilliant project, government support, good policies, but when you speak with the civil service, there is no administration. And they collect people, partly for photo shoot, but when you go there, they come around the table, you have 20 people from 20 different departments, but the moment you leave the country, they all go to their own jobs. So there is no particular team that can administrate it. Thank you.
Thank you very much indeed. Now, we have here today representatives from several Latin American governments' inward investment agencies. I'd like to ask our panelists, what are you looking for from those inward investment agencies in terms of optimal conditions for investment? Gershon, you touched on the subject of political stability as being a key factor. Perhaps I could open that up to other panelists. Leonel?
Well, I would probably stress that issue of public-private cooperation that I mentioned before, because the issue goes beyond PPPs. So it goes beyond just having joint ventures where there is investment from the government, investment from the private sector. Cooperation goes beyond and extends to public policy, for instance, policy design, policy creation. In the DR, we do have the experience of a very active private sector and a very receptive public sector. So every time regulation is being considered, a new piece of legislation is being considered, you will see the government going after the private sector for ideas, using it as a sounding board. And you do see the private sector very proactively also going to the public sector to propose new ideas. So that pattern of reinvention and transformation of the DR economy that I've mentioned before has been built mostly on that spirit of cooperation in, by the way, years of political alternation. So we do have, going back to what Gershon was mentioning, this is a country where you do see a lot of political alternation, and even though this pattern continues. So that, I think, explains part of the energy and the dynamism that an economy will retain. I have the experience of working in other countries in Latin. I do consider this to be the case in other countries as well. Of course, I can share the DR experience, but I don't think this is something that you will see only in the Dominican Republic. It's something that I do see in other countries as well. But in general, this continuous cooperation between public and private sector, I would consider that as something that agencies and investors and multilaterals would like to see in countries in Latin America. One latest initiative of the government in DR, for instance, was to create a competitive board formed by key people from the private sector. So the president himself sits down once a month with the private sector, ask questions, listen to the answers, and then put in practice the ideas that would come out of those meetings.
Thank you. Robin?
I touched on some of the main principles we would look for, but I suppose if I were to summarize it, there's probably three areas that we look for. The first is creativity in terms of the approach, the business model, and the potential ways that actually joint ventures can be built. And that creativity cuts both ways. The second is it sounds obvious, but genuine local expertise. By definition, we're never going to know your market. We're never going to know the culture, the practice, the employment, the education systems, as well as each individual country will. And we absolutely rely on that local expertise in order for us to make the right decisions. And the third is practicality. We have a business where our work is very highly skilled and highly specialized. So working practically on apprenticeships, for example, on education that can help us have the right types of skills and employees locally. We also have a business, not surprisingly, if we're shipping money around, where security is incredibly important to us. So we want to work with the local entity on making sure that security is a fundamental part of the overall business. So those are really the three things: creativity and approach, real local expertise, and real practical steps to help us be successful together.
Thank you. You all touched on the subject of risk in terms of your respective businesses in Latin America. I think it's important to place Latin America in its wider context. In Transparency International's 2017 CP Index, Latin America scored 44 out of 100. So there's work to do. But to put that in its global context, Asia Pacific also scored 44 out of 100, Sub-Saharan Africa 32, Eastern Europe and Central Asia 34, with Western Europe coming first at 66. Could you tell me a little bit more about how your organizations manage the framework of risk within which you operate in Latin America? Ramin.
I think risk in Latin America, it comes in various levels. I think one of the very important factor for investment in a country is understanding. We do a lot of PPPs, and understanding what kind of risk we should take and what kind of risk the government should take. Often governments believe that if they pass all the risk to the partner, it's a very good idea because it's simple and they take no risk. What they don't realize, by doing that, they are passing also risks that they could easily take over and solve. As for us, we need to put a very high price on it. So if I am taking all the risks, I'll give you an example. For example, if we are building a railway between two stations, we would like the government to take the risk for planning permission. If the government passed the risk of the planning permission to us, the price would go hugely up. I think it's very important that governments understand that it is not always good to pass all the risks to the companies, but also looking at it, saying where the risk is better placed and is cheaper to be placed. I think that is one issue. The second issue is going back to the political issue that you mentioned. Political stability is important, but I think world has become, for two reasons, much smaller. One is it's become more an organic interaction. So if you have a very stable government, let's say, for example, Russian government, it doesn't mean necessarily that you can easily invest and repatriate your money, because it could be sanctions. So stability of the government itself has very little meaning today unless it's in a bigger context. I think that's one thing. This other thing is, I was saying, the sentiment. Our funds is much smaller, fraction of Gershon. But what is important is the nature of the investors has changed. They are looking not just on the stability of the government, but also on the social effect of their investments. And it's more hands-on. And therefore, it's not just about how stable the government is. And stability of the government is questionable. Is British government stable? I think that these are very fine line, that how do you define stability of a government? Thank you.
One final question before I open up to the floor. Gershon, to you. This session asks us to consider the future investment landscape, as well as doing business. Now, without giving away the family silver, what areas of growth have you identified in Latin America which may, for your business, represent an attractive ROI?
I mean, I'm very optimistic. I mean, I think it's a great region, and I think for us, it's an area we want to focus on. You know, with every positive comment, there's always, you know, some potential for negativity as well. And maybe because of the audience we have, maybe I can try and be helpful, because in all the areas that I'm interested in, there are multiple risks. But there are multiple risks wherever we invest. Risk isn't actually a problem. We quite like risk. We like the management of risk, and we like to price that risk. Actually, we don't like investing where there isn't any risk, because we can't make any money. So risk is not necessarily a bad thing. But there are many risks that people are familiar with, from currency risk and all the various risks these expert people have just been talking. But I want to leave you with one thing which seems to be more endemic, perhaps, that if we could improve on this and we could advocate for it in all of its manifestations, I think there could be, you know, a real sort of transformational change in our ability to invest more money in all the sectors we're interested in. It sounds simple, and it's familiar to you, but it's never discussed because it's always in a granular context. In fact, Rami's just talked about certain things around planning. But what does this really mean, and what risk to us means that we have to price it so much that it almost then becomes a waste of time to actually make investment? And the way I look at Latin America, and apologies if it's offensive, but I'm going to say it anyway, is nothing I've actually mentioned before, surprisingly. It's what I call delay. Relatively speaking, the delays in creating opportunities, in then meeting those and delivering those opportunities, seems to be more of a problem in Latin America than in other places. And if I was in your shoes and I was trying to be an advocate for investment around the world, I would look at what areas produce the biggest delays and spend more time focusing on not eradicating the delays, because we have delays for all sorts of things in every country, but making a meaningful improvement in those areas. There are areas at the moment where government have great intention, but because perhaps it's not such a well thought out idea, it's maybe too politically driven, because of the need for, you know, democracy to be re-elected, people want to make, and politicians want something to happen quickly, but it may not be quite the right thing. And by the time it then comes to fruition, actually we realize it's the wrong thing, and then it's abandoned. And there's been a history of multiple times where this has occurred in Latin America. I call them stalled projects. Rarely cancelled, interestingly enough. There are other countries in the world which have problems in cancellation of ideas, but things that get halfway and don't get completed, or things that get stalled. And these are huge issues for us because we have to price that in. So at the moment, if we're doing mining projects, a lot of big mining companies, obviously, as we know in Latin America, but actually the issues around sustainability and environmental issues and local community issues are now creating an environment in which projects become stalled, and the timing of their execution takes longer, and the costs and the risks become greater. So without going into every single sector and looking at all of those risks, because they're permitting and planning and decision making and all of these things, it's trying to trade sort of from a high level, but thinking about it and advocating against cutting delays to things, because that, to me, is the word which describes for me one of the big problems in trying to effectively price risk in Latin America. So there's a great audience because you can all go back and converse with your governments and say, you heard today that, the entire world investment will open up. All we've got to do is to, try and do better in terms of areas where there are delays. So I keep saying that word because I kind of want you to think about it, because it appears in so much of the commercial and economic environment. I could spend more time talking about currency and petro and, all these other things. But I just wanted to just do that one item. It captures a whole basket of things. And by the way, I never expect miracles. Remember this, it's relative. You only have to be a bit faster than another country, and suddenly you become more interesting as an investment proposition.
Thank you very much. I'm sure we've got questions from the floor, so if you have questions or comment, now's the time. Gentleman over there. I think there's a microphone coming around.
Hi, good morning. Lawrence Jones from the Jamaican High Commission. Is expropriation of investor assets still an issue in Latin America?
The expropriation of assets, is that still an issue?
Well, I can make
Gershon.
a quick comment. I mean, and again, I've got to be very careful. I'm not such a diplomatic person. Our chief diplomat left a while ago. So forgive me if I say something, and if I've offended you, please come up afterwards and I'll make an apology. But clearly we're nervous about long-term investment in infrastructure in a country like Venezuela, because the more recent history has given us cause for concern. Now that may change. We're less worried about expropriation of assets in a country like Colombia, Peru or Chile. And we're seeing a rise of OECD membership, and I think if there was a hint of expropriation of assets within an OECD-approved country, then they would lose OECD status, and so that's clearly something they want to avoid at all costs. So yes, there are differences. I think I've focused my platform's growth in Latin America on the areas that I think are the most stable, but I'm open to expanding that. And just to give you an example, I don't think there's expropriation of asset risk. I may be wrong, but I don't think there is in Colombia, Peru and Chile. That's where I started the work that I do, but I've given scope to invest in Uruguay and in Mexico. And so I'm gradually moving out, and there are other countries as well that it is a risk, but I think that risk, has become, I think, more obvious. And so in the short term, we can make quick decisions about avoiding the areas that we might be concerned about. But there are plenty of places where we wouldn't be that concerned about expropriation of assets. Just final comment on that, because I've said it 3 times now. We're sitting here in the City of London, we're wondering about the political landscape, and we have heard from the opposition party something that is close to expropriation, i.e. nationalisation of private sector assets in the United Kingdom. So it doesn't matter where you go in the world, the issue is an issue. Again, it's relative, and it needs to be explored carefully, and it needs to be thought about.
Leonel, would you like to add?
Yeah, there is no risk of expropriation in the DR, and I like to say it with some certainty, because that's the case. And the reason for that, I would say, is mostly international oversight. The perception of risk of expropriation is something that creates so much concern in general in investors worldwide, that governments like the DR, which are trying to have a very open economy and cater for foreign investment, are very cautious and very aware of that. Well, what you do see, and in fact the last 20 years, every time the government has needed any piece of property or land for an important infrastructure project, has ended up buying that at market price. Of course, the ability of expropriation does give the government leverage in any country, and the cost of expropriation is always there in the middle of the negotiation. But when you look back at the transaction retrospectively, you can see that it was actually bought at market price. The reason, again, because I'm pretty sure the temptation for expropriation is always there, is international oversight, especially for countries like the Dominican Republic that are so much dependent on foreign investment and having an open economy.
Thank you. Do we have any further questions? Just over at the back.
Thank you. Hi, good morning. I'm Diana. I work for TransferWise. I would like to I would love to hear from your experience if effectively making the investment, sending money to the country, getting the money out of the country is still a challenge for the region, and how would you compare it with other regions that you invest in?
Ramin?
I think yes, it is still a problem. It is a problem. I mean, putting the fact that one has to buy swap to secure the currency, a part of that, there is a problem. It's not that bad. Is going back to the last question, is the question of risk and reward and pricing. I mean, in a world of insurance, they say there is no bad risk. There is just bad premium. So you price it correctly, and I think you can overcome. I think one of the worries on your question and the previous question is this attraction, and this is funny coming from a Swiss person who does. We do referendum on a weekly basis in Switzerland, but the reality is, as the previous speaker she said quite clearly, referendum generally is trying to be populist and overcome the political administration and check and balances. So normally, populist governments try to make a referendum not to go through the conventional route. And that, as an investor, makes me nervous, because populism, you can ask people any question. If you ask the wrong question, you get the wrong answer. And I think that's the problem with a referendum. Do you want to be killed with a gun or a knife? Wrong question. But you get the right answer. You can kill them. So I think that's very important to be worried about. As an investor, we are worried about an administration who tries to circumvent the political check and balances.
Thank you. I'd just like to come in on the subject of governments. We've considered Latin American governments, and we heard from our own government before, from Sir Alan Duncan. To our panellists and to Robin, perhaps, what more, if indeed more, can the UK government do to help your business succeed in Latin America?
Well, I shudder to say this, but there is a world outside of Brexit. And I think that it's very difficult at the moment for the headspace and the focus that's going into that one issue, I think, is overwhelming too much time, if I may say that. I think it's an absolutely critical issue, but there is a world, and the UK government, the UK needs to be an outward-focused international brand, and it's difficult to do that when 98% of the focus is in one area only. So I think that would be the first thing. The second thing is we are encouraged by the more business-focused activity around the DIT, and we think that's good progress. We would say a couple of things consistently. One is we're in this kind of odd world between we're not as big as the sort of main infrastructure type projects that you might hear about, and we're not an SME. So we're kind of in this odd world in the middle, and I think it's important that the UK focuses on all sizes of businesses and finds a way of doing that successfully. Not easy, but really important to do. The second is joined up. Being joined up in terms of regional policy, being joined up in terms of alignment between the various entities of government that can help and support both business and regional agendas better. And we still look for, we think there's good progress being made, but we think there's more that can still happen with that.
Thank you. Question over there, then we'll come to the gentleman in the middle.
Yeah, hello there. I'd just like to ask all of the panellists their view on corruption in the region, and except that every country is different, needless to say, but in the wake of Lava Jato in Brazil and the impact it's had in other countries, if, as investors, your concerns are greater or lower over corruption in the wake of Lava Jato?
Are your concerns greater or lower in the wake of Lava Jato and other corruption scandals?
Shall I go?
Please.
Tricky question. I think right question. Yes, I think there are two aspects to it. One is where we are, So we are heavily regulated these days by every single authority. And therefore, we have to be very careful. And the presumption of corruption is a very fine line. If I take a minister for dinner, is that bribery? Or if they take me for dinner, is it? And this line is not anymore that clear. The fact is, as my colleague said before, corruption exists everywhere. And how should I put it? I have to be politically correct as well. But I think there are two kinds of corruption. One is proactive corruption, and one is negative corruption. Negative corruption is if you don't pay, you wouldn't do business. The proactive one is if you pay, it go quicker, but we wouldn't stop you doing business. And I think all different methods of corruption still exists. And you try to maneuver away from it, and you have to be very careful and deterrent to investment, because if you feel you can jeopardize your entire organization by going in an area which is a gray area, so you try to avoid. So I think it's an important issue. I think everybody talks about it, but there are very few regulations that they could make the government to avoid it.
Of course, in this country, we have the 2010 UK Bribery Act, which imposes upon companies an obligation to have reasonable procedures in place to ensure that corruption and corrupt practices aren't pursued in country. And in conjunction with that, you have the US Foreign Corrupt Practices Act, which places a similar obligation on companies acting in countries to do the same, along with, of course, the domestic legislations of the countries in which businesses are operating.
I think if I may add to that, it's quite important because, as you said, with the US new regulation, well, not that new, but few years regulation, is if the corruption happens between two other countries, let's say British businessmen pay bribery in Peru, for example. If the currency of corruption is US dollar, US administration has authority to intervene. So if the payment is done in US dollar, then it goes under US authority. So therefore, you can end up in orange jacket, I think it is.
Curiously enough, the Foreign Corrupt Practices Act doesn't cover what are called grease payments, facilitation, $5 here or there, whereas the UK Bribery Act is even more rigorous in its exaction.
Just a very quick point, because I talked about it before. But headline point, the biggest single barrier to global investment flows is corruption. So, it's a sobering point. But then, as I said before, and as Rami's just reminded us again, it's everywhere. And that's why we have these acts. That's why we have these global legal sort of frameworks to govern it. Because, we would like to have a system where money flows across barriers and isn't prevented from flowing because of corruption. But as I said earlier, what has been impressive, in my view, more recently about South America is the action that the authorities have taken. And I think that is also something to bear in mind. You see, it's what is the action, not what's. It's like sort of when you've got an illness, what are you taking to sort it out? The illness is everywhere, but what's the medication? And the medication has been pretty impressively applied more recently in these countries where there's been, Brazil, Peru, Colombia, Mexico, not Colombia so much, Mexico and so on, where we've seen swift action by the authorities and actually quite extreme action. I mean, the penalties are severe. The custodial situation has been quite severe. That's what we look at. It's the response, not just the corruption itself. We expect to see it, sadly. We hope it will diminish over time, but what's paramount is to see what action is being taken by the authorities.
Before we come to the gentleman in the middle, Robin, you work for De La Rue, which is a publicly listed company. Yeah. Could you tell us about your approach?
Well, our approach is we will walk away from business, simply put. And I think that everyone is absolutely right, that this exists globally. We have to have a standard that we apply, and we apply that entirely consistently. And if that's what happens, I was very struck by a comment made by a leader of an African nation a couple of years ago who came to the UK and said, "Don't tell me I've got a problem with corruption. Tell me how to fix it." It's all very well to observe from distance that there are issues, but actually I think we as corporations have a responsibility to help fix corruption rather than to make an observation that it exists. It exists. But let's work together by applying our own standard, which we do, which is we will not do business if that's what it takes, and then make sure that we all work together as both the public and private sectors to continue that process of eradication and work on the actions that governments are taking, which are very impressive.
If I may add just one thing on that, I agree with my fellow panelists, and I think actually it looks much brighter in general. In Latin America now, when you think about corruption and the perception of corruption, on the one hand, there is the fact that all Latin American countries have actually passed legislation modeled after the Bribery Act and the U.S. Foreign Corruption Practices Act. So you do have now strong legislation in place. But there is also the fact that governments are cooperating more in general. The Dominican Republic, for instance, received a lot of cooperation from Brazil with the Odebrecht case, so that our authorities could act as quickly and fastly as Gershon was mentioning, the Brazilian did, in part because of that cooperation, as we did receive as well from the US and the UK in general. But the fact that new legislation is in place and authorities are actually proving to be able to act much quicker, in fact gives a much brighter impression on the issue of corruption in the Latin economies.
Thank you. I think we've got time for perhaps one question in the middle.
Thank you. My question is to Mr. Cohen. If you can share your perspective in terms of what sectors within infrastructure you see the most opportunity for investment in Latin America? Is it transportation, energy, etc.?
Well, I think the next panel is actually covering that, so I don't want to preempt that. But the good news for you is I'm on the next panel. So. But I'll say one thing now that I won't say on the next panel. Every country should be doing something different. It should be working out what infrastructure it requires for the economy it wants to be. And that can mean different things depending on the nature of that economy. If you're a landlocked country, you don't want to start building ports. So the other thing I would say together with that is what I look for, which is a much more common sense approach by governments, which is actually within what's required, because everything is so expensive and they don't have all the money, no country has all the money for what they want, what can be delivered with the quickest return so that the revenues from that project can be reinvested in more infrastructure. I call that prioritization. It's something that people talk about but actually don't do very well because the political system doesn't allow it to, because politicians like to cut ribbons on something in the press that they can show everybody they've been responsible for. But if that's the wrong thing for the sort of a 30, 50, 100-year view of the economy, then we've made a fundamental mistake in prioritizing that investment versus another piece of infrastructure. But I think you have to wait till the next panel.
I think we're out of time, unfortunately. Do we have time for one more question? Yeah, I think we do. Gentleman over there.
Hopefully this one's a quick one. Picking up a point that Gershon made earlier on, you've mentioned some of the Latin American countries are going for OECD membership. What is your outlook on them achieving that, and what is the prize were they to do that?
There are only, I mentioned, I suppose I should answer given I mentioned it, but I'm happy for someone else to take the answer. Forgive me, I think there are 34 members of the OECD, and I think in Latin America, Chile and Mexico are OECD, but Colombia may have just achieved OECD status. Look, it's not a vital criteria for investment. It's just another measure that the governments and the political parties, are serious about long-term economic and fiscal stability, and that's obviously a very good thing when it comes to investing. It's a sign, and it's a good sign. And I actually think you don't have to have it, but if you are on the way to it, and in fact we started investing in Colombia before it had that status, because we were hoping it was on the right path to achieving it. So when we look at other countries that are taking a similar road, that would give us a positive signal. But it's not vital for doing business. As I said, we operate at the moment, I think we invest in 80 countries, and there are only 34 that have OECD status.
Thank you very much. I think we're now out of time, but could I just come back to the words of the minister at the beginning, which is that doing business in Latin America starts here in this room today. You have 19 representatives from each of the Latin American embassies. The trade and investment teams are extremely professional, willing and able to help, as are their heads of mission represented here today. So I suggest in the coffee break and in other moments you find time to connect. And it finally falls to me to thank our speakers for their contributions and to you, the audience, for yours, if we could show our appreciation. Thank you.